Hello everybody, Carlos here from Four Side Effects and welcome to another forecast video. Today is October 14th, 2013. Alright, we were looking for a buy setup with a pivot step on the British pound, buy setup synergy zone on the euro dollar and standing outside on the other market. So here is a great trade that we had on the pivot step as stated before. Once again, check the video below so you can compare what we said from the opportunities. Here's the entry, and once again, we nailed that target right there at 60.16 by the tick. Take a look at that. All right, so basically the market provided us, we're on the 30-minute chart by the way, and I'm going to show you two setups here. I provided about 32 pips only in these terms. The next and prior setting was on the 1 hour chart, and we would have used these two levels right here. And by using that, obviously the 1 hour trading setup became a little bit late into the trade right here, providing us only about 13 pips. On the 30-minute chart though, that would be the entry anyways. We would have used this pivot step. All right, and that's going to be the entry right there, providing you with roughly about 22 points. So either case, it gave us a great opportunity, more than enough time, a couple of hours on a profit mode for us to diligently manage our trade and close with a profit. Okay, so what we should do right now, we go to the 4 hour chart over here, and we can see that we're below 20 and the market is pushing a little bit further up. But once again, I just wanted to point you to some extent our intentions here. Take a look how the market indeed closed up beyond this high over here and immediately came back towards the south side. I see the moving averages weakening a little bit. It looks like more of an intended sideways situation, if you might ask me. So we were really expecting the next levels of targeting being reached, and the market did not actually held accordingly. So I might feel that the British pound is a little bit sentimental in terms of market momentum, so it might dip a little bit further down and sideways from here. So what we're going to be doing is taking a little bit of a break from it until I see a more conviction move towards one direction. And once we see that happening, we'll come back and analyze the market with a better understanding and probability. But either way, it provided us a great trading setup. We nailed the top bottom formation reversal, and we nailed the top as again on the last 2 days. So this worked out for us very nicely. Same thing applied on the euro dollar. Euro dollar, here's the synergy zone over here that I overextended until today. Here's a pivot step for confirmation of that entry. That would be something like so. Okay, we're on the 1 hour chart, and the same thing applied here. If you were waiting for the close on the 1 hour chart just by the close of the first target and the market just reversed, that would have just basically put us on a losing trade. But when you go to the 30-minute chart, which is a triggering that we use, remember we analyze the market on 4 hour chart for trend, 1 hour chart for pivot step, and 30 minutes for execution, as low as 50 minutes, no lower than that. Here's the entry, moving averages backing this up. And once again, I cannot stress enough, this is the euro dollar. Take a look at the target. I mean, come on. 35.97 by the tick. We nailed it incredibly. It doesn't mean that we got filled, but at least I know where the prices were hitting in order to receive the highest level of resistance. If you followed my video yesterday and I explained to you where these numbers and levels came in, you got to be completely amazed by now how powerful these levels are. Okay, it's just a matter of accordingly get accustomed to it and get the feel of how much or how many points we usually get until those targets are reached, because once we have those levels in, you pretty much have an idea of how much profit you're going to be able to make between the actual price and those targets, meaning you should not have in your mind the expectancy of making hundreds of pips in one trade, although we've seen that a couple of times. But basically in this case, let's say that we had an entry right here. We already know that if the prices will move, it's going to give us about 29 points So I can prepare myself about that and say, well, once I see 20 points or 25 points, I'm going to liquidate half of my position, move to break even point, and see if we can just go to the next level. See the whole process here. Now remember when I explained to you yesterday about the triangle. Here's a triangle formation, and just to give you a real rough guidance here, we should usually the optimum run after the breakage should be the width of the triangle, translating into 58 points. But I also show you how you can measure the two or three, three levels of movement. Here's about 46, and here's about 24. So you know that the first level, obviously, it was 30 from the breakage right there, about 30 something. So the first level was the one who provided us a dual confirmation that this width coincides with pretty much the same movement of what they did right here. So we have dual confirmation about the price action telling us how much they're going to move, plus the numbers that we plot, and you say, you know what, around that level, I'm going to be liquidating my positions. All right, so this was a very profitable trade as well. So, but unfortunately, just like the British pound, it looks like these guys, although coming off 20, are just dying out a little bit in momentum base. You see the reaction and coming back down, and I see the angle of attack of the moving average intended probably into a sideways situation. Now I'm going to leave this area just for guidance. I'm not going to be trading it, but just for guidance in terms of the base strong most reactive support, which is this guy. You notice here that they entered and came about. It's not until they close below 35.20 that I can call this a reversal. So basically, just for once again as a reference of training, we're going to leave this in place. We're going to leave it as it is and understand that if the price is hit in this area, we're still kind of good to continue towards the upper side. As a reminder, I explain to you why, right? Remember, which is from right to left, the highest high. This is the highest high. It's coming from this important low, right? And this was the next swing. Since this is the highest high, this is the one who's ruling right now the trend, and it's coming from this most important low, meaning that if price is still hovering inside the zone but don't close below that low, which is close enough to that 35.20, it indicates that the market still can position itself back towards the upper side as a major trend. Okay, hope that makes sense. It's not until this guy is violated based on price actions activity, based on the market flow and price action activity, that the market dictates a sideways situation, slightly bullish until this is violated towards the downside. So the decision would be to stay out of the trade until we see a more inclined conviction towards the upper side and we come back and analyze accordingly. Okay, but in the meantime, I see the market just hesitating. Let's see if they break above it and reach the next levels around that area. So far, right now, I'm standing outside on these trades. Next, we got Australian dollar. Finally, today they kind of move, but I see it. You see, they spike up and immediately reject it from the top right there. We go to the 4-hour chart. We can see here that these guys are extremely overbought. So this type of burst right at the last minute of the day right here is not the intended move that I was looking for. So I'm just going to be standing outside on this market. For some reason, I don't feel comfortable. I got some levels here of strong resistance area, but I don't have any conviction as my the information that I get from the big players are not they're not focused into this market. So if they're not, I'm not even going to waste my time within it as well. So I hope that makes sense. Last but not least, dollar yen. We go to the 4-hour chart. Let's see if we can do that right now. All right, so we're in extremely overbought conditions for quite a while, and the market is still pushing a little bit further up. Now, this spike towards the upper side took the most important previous high right here. But notice how this spike is in the same place as well. What would that give you as a rough guidance? Let me go a little bit further back. We can just find some sort of tendency, and we notice here that it worked as a support. Okay. Work as a support in here. and now it worked as resistance. So the market is extremely bullish, though. I find myself a little bit hesitant to position ourselves towards this trade as it is extremely overbought. Honestly, I would be inclined if I would be trading on lower time frames to be a buyer. Um, if the market pulls back between these levels right here. Okay, we're talking about 98.35 and 98.21. The reason being is because of the angle of attack of the moving average. That's the only reason I probably would consider that buy setup or pivot step. Targets are going to be 98.73, 98.90, and 99.03. I'm going against the rule of the 4-hour momentum just because price action is ruling right now. Take it, the angle of attack of this moving average is definitely very healthy towards the upper side. So basically what we're going to be doing, we're going to place a trade on short term based on price action activity and the pivot step. I plotted here the Zenigi zone as one that I might be comfortable taking a possibility entry point if they reject it and confirm it with a pivot step towards the upper side. Now bear in mind we can also see the market drifting downwards and giving us a couple of the swings down and reverse up all together towards the upper side. If that happens, we'll take it and place our stop very tightly below that pivot low that they're going to leave behind. All right, so we're standing outside from all the market with the exceptions of the dollar yen to see if this actually works out. Once again, as a warning, and disclaimer right here, just be careful on this trade because we're trading on overbought conditions on the bigger time frames, but it looks like the smaller traders are pushing this market a little bit further up. Since target has not been reached, it could have the potential of giving us one opportunity. So I am going to be trading this with probably a mini lot of $1 per point, or one mini lot or micro lot depending how you're going to be trading it, and I'm going to be watching it closely. Once again, I don't feel that comfortable, but price action is indicating since we have no other setups on the other market, this is the one we're going to be trading at. This is Carlos Diaz from Four Side Effects, and I'll see you on the next forecast.